Good morning, everybody. Welcome back to this next session of the New York City Real Estate Expo. My name is Richard Lorenzen. I'm the CEO of Fifth Avenue Brands. We're a PR firm based here in New York for the real estate industry. And we're going to be bringing you a special session today, talking to a big investor and developer about the current state of the US real estate market and looking at some of the different places where they're putting their money to work. So DMG Investments is a New York-based investment firm. They were founded in 2013. They focus on real estate acquisitions and development across the US, and they have a large number of holdings. We're joined today by DMG Investments COO, Jeffrey AMENGUAL, for a discussion on his views of the state of US real estate and where they're looking to put money to work in 2021. So without further ado, Jeff, thanks for being here.
Oh, my pleasure, Richard. It's good to be here to meet with you, and hello to everyone in the audience.
So let's jump right into it. Jeff, could you start by giving us a high-level overview of DMG and the businesses that you guys are in and what you invest in?
Oh, absolutely. So DMG's primary focus has been student housing on a nationwide basis, and between student housing and multifamily properties, we have about $700 million in assets under management. We're a vertically integrated organization. We do finance, acquisition, development, construction management, and asset and property management as well. And we have other divisions in the company that support our operations.
Got it. So with such a diversity of business interests, what's your macro outlook on real estate and the US economy for 2021?
So we're at one of those transition points in the economy. As coming out of COVID, hopefully we're coming out of COVID fairly soon. One of the concerns is sort of the inflationary pressures that we're seeing in the industry and across the economy. Traditionally, real estate is viewed as a hedge against inflation. In many respects it is, but obviously to get there, to get to that sort of stabilized position in real estate, you have to go and purchase properties and you have to build them. And those put pressure on us in terms of timing and location and focus. So those are some of the challenges that we're facing in this market space that are extremely dynamic.
So you mentioned real estate as a hedge against inflation, and obviously there's been a lot of talk of inflation over the past couple of months, and with the 10-year Treasury rate, kind of inching higher and higher, a lot of people are worried about the ripple effect that could have in terms of the real estate market, cost of financing, mortgage rates. So where do you think, what role do you see that playing in the investment decisions that you're making? And is that something that you see as a potential headwind?
Well, again, all of our positions are, take a long time to develop. Typically, when we decide to acquire a property, it gets delivered within 2 years or more. So we have to take a longer view, and inflation cycles come and go, and we try to stay out in front of them. This one is putting pressure on us in terms of deciding what locations are best suited for development. There are areas in the nation that we think are exciting. For example, the Southeast and Southwest. All indicators are that these are burgeoning economies that will continue to grow and create a dynamic path for us. Being in the student housing arena, what we look for is in key universities, Class A properties to develop, and those that have large-scale enrollments projected for the future, solid endowments, solid student base. So we think those sort of run the tide of inflation, but less so than other areas of the economy, and that's why real estate is a strong component as a hedge against inflationary factors.
So what are some of the key sectors of real estate then that you think are ripe to outperform this year?
Well, again, we think that multifamily, student housing, affordable housing is a key and necessary area. Workforce housing is a key and necessary area. Areas that we see or sectors that we see that are struggling and will probably continue to struggle are hospitality. Large big box retail will continue to struggle. Many of these have to be repurposed. We look at them as an opportunity to repurpose them, particularly hospitality. We have interest in taking those facilities out there that may be underperforming and repurposing them for student housing and other types of housing. So we think that there is merits in continuing in our investments in both student and multifamily, and extend our investments into affordable and workforce housing.
So student housing, could you tell us a little bit more about the portfolio that you have in student housing, where those properties are located?
Sure. So we're heavily concentrated in New York State with properties in Ithaca and Albany. Buffalo, we're about to complete construction on a property in Buffalo and looking at a second property in Buffalo. In fact, in almost every market that we're in New York State, we're already looking at our second and third development structures. So we have a project under construction in Albany, which is multifam, but it's adjacent to the universities in Albany. Let's try it again, SUNY University of Albany. So New York State's been a primary for our investment and will continue to be so. We have locations in Houston, we have locations in South Carolina for upstate. So fairly diverse in that sense, but we also have interest throughout the Southeast and Southwest, and we're actively pursuing pipeline projects in places like Charlotte and other locations in the South and Southwest.
Are you seeing a trend of students that are returning to housing now with the economy recovering from COVID, and we're seeing this rebound in people going back to work, going back to school? How is that impacting your outlook on student housing investment?
Well, interestingly, losing my voice, sorry. Interestingly enough, at our properties, students chose to stay on property throughout COVID. And there was a myriad of reasons why they did that. One is probably to protect their family from contracting COVID during that time. Another likely reason is that they wanted to stay close to the universities. So we don't see necessarily a change or a big trend in terms of level of occupancies. All of the institutions that we're adjacent to have determined that they're going to hold, in-person classes come the fall semester. So it's likely that the occupancy levels are going to rebound as a very high level. We already know that our property in Ithaca is 100% pre-leased despite the impact of COVID. And we foresee that as going to be likely in all of our properties going forward. Again, another reason why student housing is such a dynamic place to invest, because your lease ups are usually completed prior to August and you're stabilized immediately. Unlike multifamily housing, where it may take you a year or more to stabilize, student housing doesn't have that same level of surge that you might have to have it in multifam.
You mentioned workforce housing as well. So along a similar vein with the post-COVID recovery, we're seeing this interesting situation of a lot of companies that are spreading out to lots of different secondary cities across the U.S. They're going to Florida, they're going to Texas, and I would expect that's putting a lot of pressure on housing markets in those cities. How is that impacting the investment decisions that you're making as far as what you're buying in workforce housing?
So clearly what we do is we follow the trend as well. Everybody wants to be near Amazon or Google or any of these large firms that are investing heavily in technology in sectors like Austin and other places like Charlotte as well. So we are also positioning ourselves adjacent to those opportunities. One of the challenges is that in many of those locations, finding construction companies and skilled labor to perform construction is going to be more and more of a challenge. And we're looking at solutions to deal with that challenge. We've seen that challenge in the Northeast, over the last 5-10 years. And now we're seeing that challenge replicate itself in the South and Southeast. So, we are repositioning ourselves in terms of the construction delivery method, which is a significant part of our development effort.
So are there any economic factors or market factors that you guys are cautious about right now that you think could influence this outlook that you have the rest of the year with putting money to work?
I think what it is really being strategic about the markets that we're looking to locate in. But it really is opportunistic in terms of finding the right location and the right position. Our sort of safety net is that by positioning next to Class A universities, and our entry point being student housing, it really is a sort of hedge against any kind of financial challenges. Normally what happens is once we enter into a market space for student housing, we'll quickly follow up with multifam, in some cases workforce, and in other cases affordable housing, as a more diverse program for a given area. And we like to sort of saturate areas in that sense, just to economize on our efforts. So we don't really see challenges in that sense. We always think that there are opportunities no matter what the ebb and flow of the economy is. And it's just a matter of being very opportunistic and finding those right locations, those right deals.
Got it. You also have a large condo development in Cliffside Park, New Jersey, One Park Condos. Wondering what your thoughts are on condo development versus rental development in the current market conditions.
So, there's been a lot of pressure on condo developments because of, there are challenges in the condo market. It probably will increase. The pressure will increase as, interest rates go up. The challenges might increase. Everything has to do with position, location, and quality of property. We think we've hit that stride quite well at One Park. It's a superb property. But going forward, condominiums is not necessarily going to be part of our portfolio. We think that the rental market is the right market for us at this time, and that's where our investments are likely to be.
What excites DMG then about an investment or a new project? What are the the key boxes that you're looking to check that really get your team excited to do a deal?
So it's trying to find those locations where density is increasing because of the excitement of the location itself. We particularly like cities like Austin that have a driving force that's diverse. It's got a lot of tech involvement. It's got a lot of education, med facilities. All of those sort of draw us to places like Austin or Charlotte. We're very interested in places like Nashville as well. There are key areas, key sectors that we feel are just absolutely aligned with our thinking in terms of where we want to invest.
So I want to jump for a minute into technology, because I know that DMG, your philosophy towards investing is very forward thinking in terms of looking at tech and its impact on real estate. At a high level, what do you see as being interesting right now in terms of tech and how it's disrupting facets of real estate, from construction or investment or sales?
Okay, so we've already touched on the notion that construction really is a linchpin for development, and it could either add to the success or really create failure if it's not completed on time, if you're not maintaining your cost and your budgets. So construction is probably an area where we've been focusing a great deal, an area where we feel we have to improve. The traditional delivery methods of construction have not advanced very significantly over the years. And it really has a lot of risk associated with it when you're not certain that delivery is going to be done on time or at the cost that you've projected. So we've been looking for the last 3 years at solutions to traditional or conventional construction. We particularly like modular housing as a solution. We feel that particularly for our project type, being student housing, multifam, workforce, and affordable housing, it is absolutely the right choice and right solution. Modular housing, as you know, has evolved since its early conception back during World War II. It was used for housing for infantry and other military purposes, and has slowly evolved and has become sort of the this wooden framed house that ended up in more rural areas as opposed to urban areas. Well, that's changed. I have to tell you that technology and design and engineering have come into a nexus where modular housing is almost unrecognizable from where it was in the past. And what we're looking at is solutions that bring in modern technology, modern tools to develop modular housing and modern design. And we work closely with our architects and engineers as in our design of our development projects. most, if not all of our new projects are designed around modular solutions. So, we think that that's our future. That's the future of the industry. And we're not alone in that. I know that a number of other developers have also taken that position, that their future construction investment will be towards the use of modular housing. So we're excited about it. We think that's the place to be.
It's no secret that the country has a number of housing problems, from shortages of housing affordability, environmental concerns around construction. So where do you see modular really being able to play that pivotal role to help solve some of those problems?
So it redresses all of those situations. The first thing is speed to delivery. Modular housing is done in a manufacturing vein and not in a conventional construction vein. The controls are there. It's much safer. It's safe for the workers, and it's better for the environment. There's less waste. There's less of an impact on a localized basis because these are controlled within a manufacturing setting. So if you're looking to deliver projects at a much faster pace in a stable way, where you're benefiting the environment, you're benefiting the workforce, modular is really the only answer. Because what that does for you is allows you to have a great number of controls that you do not have in conventional on-site construction. We can't control the weather. We know that accidents still unfortunately happen on construction sites, that working on sites can be very dangerous, as well as having a huge impact on the community. No one wants to see hundreds of trucks rolling in and out every day, and potentials of oil spills or other dynamics. Modular housing solutions in a manufacturing vein addresses all of those issues, and in a manner or form that, at the end of the day, for a developer, not only does it save us money, but saves us time, but reduces the direct impact on the environment and the community at large. So that's our solution that we've chosen to go forward with, and we think it's the right place to be.
So for projects that you're looking at through the lens of doing a modular development, does that change at all the parameters of your investment criteria? Does it give you more flexibility, in other words, to take on projects that normally under a traditional build maybe you couldn't have, for cost reasons, feasibility reasons, or others?
There's certainly an advantage in terms of cost, because we do realize cost savings because the delivery time is shortened. We're able to, from the point of acquisition and entitlement, we're able to deliver a modular design project faster. So there's a savings right there. Depending on location, there may or may not be a savings in terms of the construction performed. If you're in urban settings where construction costs are very high, there's definitely a savings. In more rural areas where the cost of construction might be lower, you might not have direct savings, but you have a guarantee that the project's going to get done on time and with a higher quality. And the reason why you have higher quality is that it's much easier to control the means and methods of construction in a manufacturing setting than it is out in the field. So all of those lead to greater success, which informs our decision about the type of project that we're going to perform and the class of project that we're going to perform. One of the things, misnomers about modular housing, is that it's the lower end of the market space. Well, I have to tell you that couldn't be further from the truth. Once you move into a unit that's modular housing, the level of luxury is independent of it being built in a factory or out in the field. In fact, we tend to think that the luxury component could be higher because it's built in a factory with greater controls. So we're producing a higher quality product at a more rapid pace. It addresses the affordable market with this great need for housing. It addresses the workforce market with a great need for housing, and the overall multifamily market space as well. Modular housing is a volumetric solution. So, the way we see it is not really geared for single family homes per se, unless you're doing thousands and thousands of homes, but it is geared for those mid-rise units that are anywhere from 4-story to 12-story. It's really the state of the art of where the industry is. We know that there are solutions coming up that are as much as 30-story high, and a lot more flexibility in terms of how that design looks. The other misnomer about modular housing is that it's this sort of unattractive box, and the dynamic of modular housing couldn't be further from the truth. We have seen great solutions that are far more interesting than what we've seen in traditional student housing, for example, where you have either a stucco face or some hardy boards or some other, predetermined finish to the exterior of the building. Modular housing allows us to do a wide range of solutions, including a curtain wall or rain screen solutions that are kind of exciting. So we see advances there as well.
Or as it relates to modular, or do you have preference towards urban or suburban markets right now based on what we've seen over the past year with, first people were leaving the city and now they're coming back to the city. How do you see that trend playing out and how does it influence what you're developing?
So volumetric is the name of the game for modular housing, whether it be urban or suburban or anything in between. Really, the direction is relative to the willingness of the city to support housing in general, whether it's multifam or affordable or workforce or student housing in cases. So it's the entitlement process, the cost of land, all are major impacts on our choice of location and what we do. So we don't really have a preference. It's certainly easier to build in any construction project in a suburban setting than it is in an urban infill setting. But there are, like anything else, there are risk rewards, and building in places like New York City, my hometown, is always something that we'd like to do and are very happy to do.
What are some of the other areas that you think tech is going to change how investors deploy capital into real estate over the coming years?
So it's an excellent question. So one of the things that we see happening is there's a range of capital, not just traditional real estate investment, but venture capital. And what they're doing is merging property acquisition, construction technologies, and then higher technologies into one arena where investors are looking at these opportunities and are gearing themselves more towards the tech side of the equation than anything else. What they're looking for are technical solutions and the lifestyle solutions. And so one of the areas that we're very interested in is being very innovative in lifestyle solutions. Looking at the means and methods of doing construction is one aspect, but the habitability of a property. In some of our properties, we're thinking about urban farming as an inclusionary component, right? Because we believe that, in developing properties that have green space to them is key. It's essential to, modern living. So there are lots of solutions that are coming aboard now that we think are excellent, producing safer, home environments and making sure that they're green and that there's a recycling component to them. There's a lot more investment in that area because investors realize that there are better returns for properties that incorporate more sophisticated technology.
Have you seen any changes also on the same plane with tech? Have you seen changes to how money is raised or with the evident crowdfunding? I've heard investors talk about how crowdfunding could usurp private equity or venture capital over the next 10 years. How do you think tech has changed how money is raised?
Well, I think it's changed it to a degree, but in real estate development, I still think we're following a traditional pattern. I think what's happening is venture capital is more interested in the process and in the end result, as well as potential crowdfunding. Crowdfunding, we think, will likely happen on the component level, where components in housing will be viewed as an opportunity for crowdfunding and also for venture capital. But we think that there'll still be a consistency of real estate investment that will not change over the next 5 to 10 years. It may start to drift in that way as technology improves and as the delivery methods change, but I don't think it's going to be a radical departure from what we've been seeing.
And DMG Investments, you have 700 million under management at the moment.
That's correct. And
And
we're looking to double that in short term. So we're pretty excited about the future of real estate in the United States and opportunities both in all of these sectors that we're involved in, from student to multifam and other areas such as affordable and workforce.
Okay. So affordable workforce housing and student housing is where you're looking to maybe spend the bulk of that doubling that AUM. over the
Well,
next?
traditionally, we've been student housing, so I think we'll continue that as our primary goal and investment opportunity. If we were putting in an order of magnitude, it would be student housing, multifam, affordable, and workforce. We think they're all viable, and we think they're all growth sectors and will continue to be growth sectors. So, these are challenges that we're looking to face, both short term and long term.
What do you think is the most under the radar sector of those that you mentioned that investors really need to be paying more attention to?
I think workforce housing and affordable housing, they're really two components that have relationships to one another. I think that there's a significant shortage of both in key sectors of the United States. And I don't think that enough interest has been placed in those. Tax credits certainly help. Other investment vehicles help. Municipalities and locations that are, enthusiastic about supporting affordable and workforce housing is key. The entitlement process is key, but you also have to have community support. You have to have mechanisms in place to assist with the process after the development is complete and stabilized. So really it's a community effort and a nationwide effort. We see, there's an interest at the national level to support that industry and that surge, and we think that that's a good thing.
So as people start returning to the office, and do you see that having any impact on where companies are locating their offices, any impact on how people view where they live, and going back to workforce housing, what kind of changes do you see coming out of that as people do return to the office, and then maybe some of these companies start rethinking where the office is located?
So there's a seesaw back and forth as whether people are going to come back to the urban centers to go to work, or if they're going to continue, working from afar, or maybe in smaller offices. I don't think the dust is settled on that yet. I think it's way too early to divine whether or not, the traditional urban office is going to continue to exist in its current shape and form, or if, people are going to continue to work from home. We get mixed signals from the larger companies, from Amazon and on Google and all. And at some points they're thinking that diversifying and spreading out their population is a good thing, but they also see key urban centers as significant because the interplay in the workforce is critical to development and success. So we're not sure. I can honestly tell you, being asked the question today, there's a large level of uncertainty. And we'd have to see what happens in the next 6 months to a year.
Do you think there's a geographic market of the United States that is underrated among a lot of developers and investors?
Well, we all know that areas in the Southeast and Southwest are extremely interesting. We still will always have interest in the Northeast corridor because there's great dynamics in that area. The Middle Atlantic states is also a great opportunity. We like areas like Reno. We like the West Coast. So it really depends on the local environment and the willingness of government to support development. I think those are all factors. We'll keep it secret at where we want to plug our money next. We don't want to be challenged in those markets, but we certainly are excited across the board.
All right. I think that's a good place to leave it. Jeff, thanks for joining us today. Jeffrey AMENGUAL, COO of DMG Investments. They have 700 million under management across the country, and they're looking to double that over the next year or so, it sounds like. So good luck on that, Jeff, and thanks for joining us. Anthony, I'll hand it back over to you.
Thank you, Richard. Yeah, thank you, Richard. Jeffrey, thank you so much. I also want to let everybody know that we are working with DMG Investments. They do put out beautiful webinars once a month, and I'll make sure that everybody here that attended, as well as the expo as well, that they are aware of their webinars that are coming up on a monthly basis. Once again, thank you guys. You guys are fantastic. A lot of great information and very informative. And we'll be back in about 10 more minutes. Cannabis coming to New York City with New York Real Estate Journal, Rick Kaplan. So thank you, everybody. This concludes this webinar, and we'll like to thank you all. Thank you.
Thank you, Anthony.
Thank you, Jeffrey. Bye, guys. Bye, Richard.